But let's welcome on board Gaura Sengupta as well, Chief Economist at IDFC First Bank, and analyze what the world could look like in this new Trump order. Gaura, hi, great to have you on the show. Just wanted to understand, it seems an eventuality that the tariffs are going to be here and the implementation is going to be as soon as tomorrow morning. Just wanted to understand, how do you assess Fed's action, and B, if you can really predict which way the dollar is going to be moving?
Sure, thank you. So I think the Fed action definitely, there is risk to the downside that we could maybe expect a deeper rate cut cycle in the US. The 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 whole narrative of US growth exceptionalism is now getting questioned because of the Doge cuts that is happening in the US, where various departments at the federal level are getting shut. Now, this is important because a large part of the strength of the labor market is actually because of the fact that government sector created jobs. Around 17% of the job creation in the US last year, over the last 1 year, was because of employment creation in the government sector, especially at the local level. So right now, the Doge cuts are targeting federal, but it will percolate down from federal to local governments as funding gets curbed. So that's why now, if you see the Q1 GDP for the US, the nowcast estimates or the various estimates on the street are less than 1%. So very quickly, US has gone from 2 to 3% real GDP growth that it was tracking last year to less than 1% growth this year. And the issue with the tariffs is that it'll negatively impact US growth. It can create a stagflationary impact environment where the Fed may not be able to respond to the slowdown in growth conditions because inflation pressures might increase. But just in case the slowdown in the US growth is really pronounced and hence it balances out or negates the pickup in inflation, then the Fed rate cycle can be deeper. Right now, market expectation is around 3 rate cuts for this year. Risk is that the rate cut cycle could be deeper. There could be some more dollar weakness if the data, especially the labor market data, starts showing real weakness because of the fiscal actions that are taking place in the US. So we do expect some more period of dollar weakness.
If tariffs are bad for US, then why is Donald Trump trying to increase tariffs? Because inflation will come back, it will affect economy, it will affect dollar. Why would he do it?
I think politics and economics generally may not work in toe to toe. So this is one of those situations where you're trying to work against market forces. Obviously, it is a little painful when you have globalizations and certain sector jobs get taken away because, let's say, another country is able to produce those goods effectively. But history has shown that whenever you use protectionism, tariff walls to basically protect industries where that particular economy does not have a comparative advantage, it's not sustainable. But from a political perspective, it makes sense. It gives political mileage because he is able to visibly protect jobs currently. But is it good for the US growth? No. So I guess political means and macroeconomic means are diverging.
At what point in time world will perhaps start losing its relevance in terms of the US factor? I look at the world trade today, money is moving out of SWIFT. I look at new trade corridors, things are moving away from there. I look at total export dependence on China, that seems to be, US seems to be reducing. So do you think it's a matter of time that what we today think is a threat to the world actually may be blessing in disguise eventually?
Well, I just want to just check regarding. So basically, you mean the tariffs is a blessing in disguise? Sorry, I wasn't able to hear properly.
Tariffs are bad because US is the largest economy in the world. But world becomes self-sustainable. So do you think it's a matter of time what today think is a threat in hindsight could be a great opportunity?
Okay, so let me just take you back to what the first phase of Trump tariffs has actually done in the US. So US, the first phase of tariffs 2017 to, let's say, 2020, when President Trump was the president. At that time, yes, you're right. China's trade deficit with the US has actually gone down, but China's trade surplus with the US has gone down. But if you look at China trade surplus overall, that has continued to increase. You will see that China's trade surplus with Asian countries picked up while its trade surplus with the US came down. So the goods which were unable to reach the US directly via China are making their way via Asian countries. For example, a lot is touted about countries like Asian countries like Vietnam, let's say Indonesia, Thailand. But if you look at the foreign value added content of their exports, they are very high. You look at China and even India from that perspective, the foreign value added content of our exports is lower. Domestic value added content of China is around 80% plus. While in these particular countries, it's maybe somewhere around 65% is the domestic value added. So they are basically re-exporting the exports that are coming from China to the US. So that has been the effectiveness of the first phase of tariffs. The reduction in the importance of the US, I think that's not a story that the tariffs are doing. It's a story of demographics. As the US economy, basically the developed markets, the demographics, they change adversely and these economies start aging, then you will see the rise of other economies. For example, from this particular factor, India is one of those few countries in the world which have positive demographics which are going to stay in place for the next 20 to 25 years. So we will be adding to our working age population, while in these countries, their demographics, their working age population is actually shrinking. So their ability to consume product, to be, to have that sort of impact on the global economy will gradually come down, and you will see other economies, and you are seeing other economies becoming bigger and bigger players. I do agree the one good part about tariffs is that it will force industries or to be less reliant on protectionist measures given by governments because they can change overnight. It'll even out the playing field. In the case of, let's say, if you look at India and US, if let's say the reciprocal tariffs come into play, the impact will be really on things like agriculture, textile, where the tariff differential between both our countries is much larger. It's maybe 20 to 40% is the tariff differential. So you can see these particular sectors, there could be some increased competition because of a level playing field. But I think that whole moving away from the US and less dependence, I think that's a part of normal demographics as countries grow, as developed countries, you have aging phenomena taking place. So their role in the world, at least in global economy, will get relatively lesser.
Yeah.
Tariffs, I think, have a more disruptive sort of influence right now, but it'll definitely help make our own industries focus more on competitiveness than tariff protection.
Certainly take your point, Gaura, but with this, we let you go on that note. Thank you so much for taking the time out and speaking with us and sharing your perspective that how do you see the new world order under the new tariff regime. So all eyes on that. Definitely the global markets too are seen to be waiting. What could be the announcements on the reciprocal tariff and how the other geographies and countries will react to that.
If you like this video, then like, share and subscribe to ET Now.